Let's hone in now on the kind of activity we're seeing on the Kenyan market scene. Of course, recapping on trade as it played out in yesterday's session. First, taking a look at the markets, we had Kenya's main share index jumping 1.6% by the close of yesterday's session, extending gains to a sixth straight session and lifted by expectations for strong earnings, which kicks off, of course, next week. The NSE 20 share index managing to close just about that 4,522 point mark, as you can see there. It's now gained 9.4% so far this year and has, of course, added to the 29% rally that we saw last year. Equities analysts forecasting strong earnings reports to come through, and that after inflation and interest rates fell throughout 2012 and the shilling stabilized after a torrid 2011 period as well. Quick look at the currency side of things. We had the shilling ending pretty flat against the dollar yesterday as tea inflows counterbalanced some of the dollar demand that we saw from the telecom and oil sectors as well. Taking a look at the local unit this morning, 87.65 is where we're at. Of course, traders highlighting that liquidity has been a bit tight with interbank rates rising. Remember, we've had the Central Bank of Kenya specifically draining shillings from the market on a daily basis this year in a bid to support the currency on the one hand, and then tightening liquidity driving the interbank lending rate higher. So that a broad look at the kind of tone that was set by the Kenyan investment community in yesterday's session. Let's drill down into some of those dynamics now with Samuel Wachira. He's a general manager at Francis Drummond and Co. Samuel, thanks so much for joining us this morning. Let's get straight into it. As I said, we've got investors angling ahead of earnings season next week and anticipating strong gains across the board, strong dividend payouts as well. It seems that specific targets have been placed on the financials, manufacturing and energy stocks. So where are your expectations sitting right now?
Thank you very much, Alishia. Very good observation there, especially regarding the anticipation for corporate announcements, which should be coming through most likely towards as we go towards the mid of this month. And just like you mentioned there, we're expecting the financials to come out with their numbers fast because their year ends are usually December, and most likely should start seeing the Tier 1 banks beginning to announce their results. And I think the anticipation is expected because last year was a favorably good year in terms of agriculture, in terms of the business environment, inflation levels, and definitely even in terms of the operations, and we should be expecting very good earnings and even dividend payouts come this year.
Well, we had Standard Chartered Bank, Equity Bank and KCB all posting increases in 9-month profit of as much as 70%. So that has certainly set that expectation bar pretty high. What kind of exposure, Samuel, are you looking at to financials at the moment?
Well, looking at it in terms of, just like you mentioned, the 9-month earnings from some of these Tier 1 banks, Standard Chartered, KCB, and even looking at how they are performing, especially in terms of the share prices. Standard Chartered had a rights issue and the share price still soared high. KCB has been on an all-time high at 34 shillings and is already indicating that the price to earnings ratio for some of these counters are already fairly low. And for those of them, especially which are below 10, is a very good. They are very good buying stocks. And my expectations definitely are that the dividend payouts are going to be very good, and even the earnings are going to be also very, very strong. And I guess the challenge now will be the sustainability of that, especially looking at the environment that we are operating in at the moment.
Looking at valuations though, and let's get a bit specific here. You've touched on KCB. It rose yesterday 1.5%. It's sitting at 34.75 at this stage, so just shy of that all-time high of 35 shillings. What are you making of that current valuation? Would you be a buyer at this stage?
Well, for KCB, I think the share has really performed very, very well. And for most people who are actually buying to early last year, they were buying it at below 20. And so the gain is very, very strong. And definitely for such a stock, I think right now it will be a very good time to take profit and even to exit. And we'll be cautious about entering at around this moment because of the share price. But people who are thinking long term, especially in terms of the price to earnings position, definitely this could be something for them to take advantage of. But to be honest, for me right now, it would be a sell on KCB.
Sell on KCB. Let's take a look at Safaricom. It's witnessed a pretty strong cooling down period and selling pressure coming through from foreign investors specifically, Samuel. We've got that price holding steady at around about the 5 shilling 40 mark at this stage. As a local investor, would you be buying in when you've got your foreign investors selling?
Well, looking at Safaricom, it's been one stock that we've been watching very closely, and pegged to the NSE index, it has been a key contributor to the performance of the NSE index. But looking at it in terms of how it has performed the recent past, even despite the news that are coming forth about their partnership, I think I saw something about them going online in terms of e-commerce. Definitely is a good opportunity for them. But I think the rally was going to hit at a certain point where it would hit a resistance level, which is what I think we are seeing with Safaricom. And unless they come out with numbers, which I think should be coming out towards May, definitely that was about to come to a bit of a cool position. But looking at it in terms of entering, I think at below 5 I would be a buyer. So right now I'll be waiting for it to come down.
Of course, just extrapolating on that story that Samuel alluded to there, Safaricom has taken its mobile money platform M-Pesa online in a deal that allows its 16 million users to pay for goods and services on the internet. So we've certainly got this company not sitting on its laurels. It's ramping up on innovation on a day-to-day basis. Samuel, what kind of competitive landscape are we looking at right now? Because things really seem to have simmered down when it comes to Bharti Airtel's contribution to the telecoms landscape right now.
Well, looking at it in terms of Safaricom, it's been one company that has been very dynamic, especially in terms of positioning itself to take advantage of the opportunities that are already there in the market, especially their infrastructure, their customer base, and even in terms of product development, which is very, very good. But looking at it in terms of the core business, especially for Safaricom, which has been voice, there is a lot of competition that's already being felt, that's already eating into it. The CCK is also trying to work at reducing the interconnectivity rates, which definitely would affect their earnings. And so looking at it in terms of how they're going to perform going forward, and especially the telco sector, there's a big challenge there in terms of how they can be able to keep their costs low and still sustain their business, and also try to see whether they can be able to take advantage of other products that could still sustain their performance.
Let's look at Kenya Airways, because there's a player that hasn't or has been struggling to sustain a positive performance, and we've seen that company record, of course, that first half loss coupled with labor disputes, closure of some of its routes. It's really worked to hit the share price hard. Samuel, your view on Kenya Airways right now, sitting under pressure, as I say, for the last couple of years now?
Well, Alishia, thank you very much for picking out Kenya Airways. That's one company that has been quite on the watch list for most people, especially in terms of how it has been performing. And I think the management issues that have been affecting it has really affected the share price in terms of how it's performing. And right now it's operating at an all-time low. There are news about equity stock ownership plan for their employees, which I guess might create a bit of interest in terms of the performance. But in terms of the share price, I think it's a stock which somebody could be very interested in, especially look at it in terms of the fact that some of these temporary issues could not really last very long, especially look at it in terms of their expansion strategy, their position in the region, and hopefully even their performance going forward, especially if they're able to sort out their employee challenges. And so I think right now that could be something that a stock that somebody could buy cautiously.